What data has come out over the last 30 days that we need to take notice of?
Critical one was the quarterly inflation data for the March quarter. It came in at 7% year on year, down from 7.8% in the year to December, which is clearly the peak. So it's sort of a good news, bad news story. The good news, inflation has peaked, it's starting to come down. The bad news, it's not coming down at a super strong pace at the moment. So we've got that issue of inflation turning around. The $64 question now is how quickly it continues to decelerate. So we can talk about that in a minute. The other news that came out for the past 30 days was the labour market numbers were good. We had another strong lift in employment. Unemployment's still 3.5%. So even though the economy's slowing down, job ads are turning down, and anecdotes about the labour market is that there's some softening going on, not showing up in the official jobs numbers just yet. The other thing, and I'm sure we'll spend time on this, house prices look to be heading up. You know, is it the proverbial dead cat bounce? But we know in Sydney, according to the CoreLogic numbers, house prices are up 0.5%. For the whole of the country. Sydney was 1.3%. Other cities, 0.2, 0.3, 0.4. But clearly there's something brewing, and I think that's just linked to a shortage of properties and the fact that the RBA paused last month maybe just got a few people out of the woodwork.
And that's what that's what we mean by a dead cat bounce. Just a little bit of information has fueled a lot of people's optimism. But let's just go back to a couple of stages there.
Yep.
So let's just talk about inflation. So it came in at 7% headline. The underlying inflation number?
The underlying inflation was about 6.5%.
So that's
a little bit less.
Not much improved from last time.
No, only a couple of tenths of a percent.
So it's and we've got a long way to go. Given, as you said earlier, they've confirmed the 2 to 3% range. So we've got to go from 7% down to 2 to 3%. That's a long way to go. Given it's a long way to go, and given the unemployment number is still very low. It's not getting pushed up to where you and I thought the Reserve Bank would like to see it move up. What do you reckon What do you reckon is going through the head at the moment? I don't want to go through your board. Yeah. We'll do that in a moment. But what do you think is going through the head? Do you think that maybe we should be doing something here and just cracking them once more, which is what they do in the US?
I think the Reserve Bank, and they've signalled this, they've given a lot of statements in the last month as well. We've heard the Reserve Bank governor speak. We've got the minutes of each board meeting, all those bits and pieces. I think they've got a bias, and we call it a bias to hike interest rates. So if there is a move in interest rates, it'll be up, not down.
Yep,
okay?
Totally.
That's a pretty easy thing to be saying right now. But do they have the wherewithal, the information to actually pull the trigger on another rate hike? Because they do know consumer sentiment's pretty weak. We still have this uncertain effect of the mortgage cliff. That is, these fixed rate mortgages from 2 years ago, 3 years ago, rolling over as we speak. There's a whole bunch of them. A couple $100 billion rolling over this year, and they're rolling over to interest rates that are way higher than they were taken out. So people are being smacked on the head with this big increase in mortgage rates. Do they want to deliver yet another rate hike when these things are going on? And when another important thing that we've spoken about, I think every time we have our fantastic monthly meetings, is what's happening in the world economy. We know the US is slowing down. We know that Europe's pretty weak. The UK's very weak. China sort of had a bit of a post-lockdown bounce, but we just had numbers coming out on the weekend. They released the numbers on the weekend for the Purchasing Managers Index for manufacturing. Okay, so that's a big part in China, big part of the Chinese economy. It's manufacturing, low-cost manufacture, dipped below 50. So it's actually signalling a contraction